On January 23, 2025, President Donald Trump made headlines by signing an executive order that marks a significant pivot in the U.S. government's stance on cryptocurrencies. This executive order, titled Strengthening American Leadership in Digital Financial Technology, aims to promote the growth of the cryptocurrency sector and lays the groundwork for establishing a national digital asset stockpile. Context and background. During his first term, Trump was known for his critical views on cryptocurrencies, often expressing skepticism about their legitimacy and potential risks. However, throughout the 2024 election cycle, his narrative shifted dramatically. Trump received substantial support from the cryptocurrency industry, with investors and companies contributing nearly half of the corporate donations during his campaign. This change in perspective is believed to be influenced by the tumultuous financial landscape under President Joe Biden, which spurred many in the crypto community to rally behind Trump. Key components of the executive order. The executive order emphasizes the importance of digital assets in fostering innovation and maintaining the United States' international leadership in financial technology. One of the primary initiatives outlined in the order is the creation of a President's Working Group on Digital Assets. This group will conduct a comprehensive review of existing regulations and propose a federal regulatory framework tailored to the cryptocurrency sector. It aims to create an environment that encourages innovation while also safeguarding the interests of individuals and businesses involved in the blockchain industry. A notable aspect of the executive order is the proposal for a national digital asset stockpile. This stockpile would consist of cryptocurrencies that have been lawfully seized by federal law enforcement agencies. Traditionally, the U.S. Marshals Service has auctioned off seized cryptocurrencies, including Bitcoin. Trump's order suggests a paradigm shift, as the government may now retain these assets rather than liquidating them, although the order does not explicitly mention Bitcoin. Additionally, the executive order emphasizes the need to protect individuals and private companies utilizing blockchain technologies from regulatory overreach. It outlines protections for developers and miners, allowing them to freely develop software and engage in mining activities. The order also reaffirms the rights of individuals who choose to self-custody their digital assets, thus supporting users who prefer to manage their cryptocurrencies independently rather than relying on centralized exchanges. Repeal of SAB 121. In conjunction with the executive order, the Securities and Exchange Commission (SEC) announced the repeal of SAB 121, a regulation that had imposed significant challenges on financial institutions looking to provide custody services for crypto assets. This repeal indicates a deliberate shift towards a more favorable regulatory environment for cryptocurrencies, in stark contrast to the stricter policies of the previous administration. The SEC's actions reflect the broader strategy of the Trump administration to bolster the cryptocurrency sector by easing regulatory burdens that have historically stifled growth and innovation. Appointments and supportive leadership. To further reinforce this pro-crypto stance, Trump has appointed several key officials known for their supportive views on cryptocurrencies. Paul Atkins, a former SEC commissioner known for advocating market-friendly policies, has been nominated to chair the SEC. If confirmed, he will replace Gary Gensler, whose tenure was marked by aggressive regulatory enforcement that many in the crypto community viewed as overly restrictive. Additionally, a new SEC task force led by Commissioner Hester Pierce, affectionately dubbed Crypto Mom for her advocacy of digital currencies, has been established. This task force aims to facilitate innovation within the cryptocurrency industry by providing a regulatory framework that fosters growth rather than stifling it. Industry reaction. The response from the cryptocurrency industry has been overwhelmingly positive. Venture capitalist David Sachs, appointed as Trump's crypto and AI czar, heralded the executive order as a significant victory for the industry. He proclaimed the war on crypto as over, signaling a new era of cooperation between the government and the cryptocurrency sector. During a gathering of industry leaders,
Sachs emphasized that the administration's initiatives represent the beginning of the United States reclaiming its position as a global leader in innovation.
Implications for the future. Trump's executive order and the accompanying regulatory changes have far-reaching implications for the future of cryptocurrencies in the United States. By establishing a supportive regulatory framework and promoting the retention of digital assets seized by the government, the administration aims to position the U.S. at the forefront of the global cryptocurrency market. As the working group begins its review of current regulations, stakeholders in the cryptocurrency community will be closely monitoring developments to ensure that the proposed changes are conducive to growth and innovation. The potential for a national digital asset stockpile could also lead to new opportunities for investment and asset management within the digital asset space. In summary, Trump's executive order signifies a dramatic shift in the U.S. government's approach to cryptocurrencies, transitioning from skepticism to support. With the establishment of a national digital asset stockpile, a favorable regulatory environment, and the appointment of pro-crypto officials, the administration is poised to reshape the landscape of digital assets in the country. The coming months will be crucial as the President's Working Group on Digital Assets begins its work, and the industry anticipates a more robust framework that encourages further innovation and growth in the burgeoning cryptocurrency sector. The executive order signed by President Donald Trump on January 23, 2025, promoting cryptocurrencies presents several counterintuitive elements that challenge preconceived notions about his previous stance on digital assets. Here are some of the key points of counterintuitive information. 1. Shift from criticism to advocacy. Trump was known for his critical views on cryptocurrencies during his first term, often expressing skepticism about their legitimacy and potential risks. However, his latest executive order marks a significant reversal, where he not only embraces the cryptocurrency sector but also positions it as crucial for innovation and economic growth in the United States. This shift suggests that political and economic realities, including substantial financial support from the crypto industry during the 2024 election cycle, have influenced his new stance. 2. Creation of a national digital asset stockpile. The idea of a national digital asset stockpile derived from seized cryptocurrencies is strikingly counterintuitive. Traditionally, the U.S. government would auction off confiscated cryptocurrencies such as Bitcoin. Trump's move to potentially retain these assets reflects a profound change in the government's approach to cryptocurrency, indicating a shift from a merely regulatory perspective to an investment strategy that sees value in holding digital assets. 3. Regulatory repeal and support for innovation. The repeal of SAB 121 by the Securities and Exchange Commission (SEC), which had previously imposed significant challenges for banks dealing with crypto custody, indicates a surprising pivot towards a more lenient regulatory environment. This contrasts sharply with the previous administration's stringent regulations. The expectation that regulatory frameworks will now foster innovation rather than hinder it is a notable counterpoint to the earlier fears of over-regulation in the digital asset space. 4. Appointment of pro-crypto officials. Trump's appointments of pro-crypto figures to key positions within regulatory bodies such as Paul Atkins at the SEC and Scott Bessent at the Treasury Department signify a dramatic change in leadership philosophy. This is contrary to the perception that regulatory bodies would remain strictly anti-crypto under any administration. The embrace of officials known for their market-friendly policies suggests a broader acceptance and integration of cryptocurrencies into mainstream financial policy. 5. Emphasis on self-custody and individual rights. Trump's executive order underscores the rights of individuals to self-custody their digital assets, a stance that runs counter to the trend of increasing regulatory scrutiny over private ownership of cryptocurrencies. This indicates a recognition of the growing demand for personal sovereignty in asset management, diverging from traditional regulatory practices that tend to favor centralized control. 6. Global leadership and dollar-backed stablecoins. The order's focus on promoting the U.S. dollar through the growth of dollar-backed stablecoins is another unexpected element. While many countries are exploring central bank digital currencies (CBDCs) as a means to enhance control over monetary policy, Trump's administration appears to be advocating for the legitimacy of private stablecoins. This stance positions the U.S. as a potential leader in a competitive landscape where digital currencies are becoming increasingly prevalent. 7. Political backing from the crypto industry. The significant financial backing from the cryptocurrency sector during the 2024 election cycle, accounting for nearly half of corporate donations, indicates a strategic shift in how political affiliations are formed around emerging technologies. This counterintuitive relationship suggests that political leaders may now recognize the economic potential of aligning with industries that were previously viewed with skepticism. In conclusion, Trump's executive order on cryptocurrencies represents a marked and counterintuitive shift from a position of skepticism to one of advocacy driven by political, economic, and technological factors. The implications of this shift could lead to a transformative period for the cryptocurrency market in the U.S., with the potential for innovative regulatory frameworks and increased institutional engagement. The recent executive order signed by President Donald Trump on January 23, 2025 marks a pivotal moment in the U.S. cryptocurrency landscape, and while many aspects of the order have been discussed in various analyses, several significant points are likely to be overlooked by the general public. Here are some of those critical elements and their implications. 1. Creation of a national digital asset stockpile. The order proposes the establishment of a national digital asset stockpile, which is a substantial shift from previous practices where seized cryptocurrencies were auctioned off. This change highlights a growing recognition of the value of digital assets and may set a precedent for how governments view and manage such assets in the future. Retaining these assets could also provide the U.S. with a significant financial resource, potentially influencing market dynamics and the strategic positioning of the U.S. in the global cryptocurrency ecosystem. 2. Regulatory framework development. The formation of the President's Working Group on Digital Assets indicates a proactive approach to developing a cohesive federal regulatory framework. This group will review existing regulations and propose changes, suggesting a move towards a more structured and predictable environment for cryptocurrency businesses. The significance lies in the potential for fostering innovation while ensuring consumer protection, which could enhance the competitive standing of U.S. firms in the digital asset space. 3. Shift in regulatory attitudes. The repeal of SAB 121 by the SEC and the appointment of pro-crypto officials signal a significant departure from the previous administration's stringent regulatory stance. This shift suggests that regulatory bodies may now prioritize fostering innovation over imposing restrictive guidelines. The implications of this change are vast, enabling financial institutions to more freely engage with digital assets, which could facilitate broader adoption and integration of cryptocurrencies into mainstream financial systems. 4. Protection for developers and miners. The executive order emphasizes protections for individuals and companies involved in blockchain technology, particularly developers and miners, by ensuring that these stakeholders can operate without undue interference. The administration is likely aiming to stimulate technological growth and innovation. This aspect is significant because it acknowledges the fundamental role of these participants in the ecosystem and could lead to a more vibrant and diverse cryptocurrency landscape in the U.S. 5. Support for self-custody and personal wallets. The order's endorsement of self-custody rights for digital assets is a notable development, as it aligns with the fundamental principles of decentralization that underpin cryptocurrencies. This provision could empower individuals, allowing them to maintain control over their assets without reliance on centralized entities. This is particularly important given the increasing concerns around data privacy, security breaches, and governmental overreach in financial matters. 6. Promotion of dollar-backed stablecoins. Trump's emphasis on supporting the growth of legitimate dollar-backed stablecoins reflects a strategic move to promote the U.S. dollar's sovereignty in the digital economy. Stablecoins have gained traction for their ability to mitigate volatility commonly associated with cryptocurrencies. By endorsing these assets, the administration may be positioning the U.S. to lead in the stablecoin market, which could have far-reaching implications for both domestic and international financial systems.
7. Political and economic context. The political backdrop of this executive order is significant, especially considering the substantial financial backing Trump received from the cryptocurrency industry during the 2024 election cycle. This relationship underscores the increasing influence of the crypto sector in U.S. politics and could lead to more favorable policies as the industry continues to grow. Understanding this context is crucial for anticipating future regulatory decisions and political alignments. 8. Impact of leadership appointments. The nomination of Paul Atkins to chair the SEC and the establishment of a new crypto task force led by Hester Peirce are key indicators of a regulatory shift. These appointments suggest a commitment to creating a more supportive environment for cryptocurrency innovation. The significance of these changes cannot be understated, as they may pave the way for more nuanced and balanced regulatory approaches that prioritize both innovation and consumer protection. 9. Market response and global implications. The overall market response to Trump's executive order and the accompanying regulatory changes could be substantial. A more favorable regulatory environment may attract both domestic and international investments, potentially positioning the U.S. as a global leader in digital assets. This shift could have cascading effects on how other nations approach cryptocurrency regulation, potentially leading to a more unified global framework or conversely increased competition among jurisdictions. In conclusion, while the executive order and its components have been widely reported, the implications of these changes are profound and warrant closer examination. The establishment of a national digital asset stockpile, the commitment to developing a supportive regulatory framework, and the emphasis on protecting the rights of individuals and businesses involved in cryptocurrencies represent not just a shift in policy but a potential transformation of the U.S. financial landscape. The momentum generated by these developments could significantly influence the future of digital assets both domestically and globally, and understanding these nuances is essential for stakeholders navigating this rapidly evolving sector. 1. Executive Order on Digital Assets and National Digital Asset Stockpile. President Trump's signing of the executive order on January 23, 2025 marks a significant shift in the U.S. government's approach to cryptocurrencies, transforming from skepticism to proactive support. The establishment of a national digital asset stockpile potentially sourced from cryptocurrencies seized by law enforcement signifies a commitment to retaining these assets rather than liquidating them. This pivot not only reflects the growing recognition of cryptocurrencies as vital to economic innovation but also aims to position the U.S. as a leader in the digital financial sector. 2. Formation of the President's Working Group on Digital Assets. The executive order's creation of a dedicated working group underscores the administration's intent to review and propose a federal regulatory framework for the cryptocurrency sector. This initiative aims to address the regulatory uncertainties that have historically plagued the industry, fostering an environment conducive to growth and innovation. By assembling experts to analyze existing regulations and develop new guidelines, the administration is signaling its commitment to a more structured and supportive regulatory landscape. 3. Repeal of SAB 121 by the SEC. The Securities and Exchange Commission's repeal of SAB 121 is a crucial development, as this regulation had imposed significant obstacles for financial institutions in providing custody and services related to crypto assets. The repeal aligns with the broader goal of creating a more accommodating regulatory environment for cryptocurrencies, contrasting sharply with the stricter regulations of the previous administration. This change is expected to facilitate increased participation from traditional financial institutions in the cryptocurrency space, which could lead to greater legitimacy and acceptance of digital assets. 4. Appointment of pro-crypto officials and industry support.
Trump's administration is characterized by strategic appointments of pro-crypto officials such as Paul Atkins as SEC chair and Scott Bessent as Treasury lead. These appointments signal a shift toward market-friendly policies and a more favorable regulatory environment for digital assets.
Additionally,
the significant financial support from the cryptocurrency industry during the 2024 election cycle illustrates the sector's increasing influence on political decisions. This dynamic relationship between the administration and the crypto industry is poised to shape the future landscape of digital asset regulation and innovation in the U.S. 1. Executive Order 13772, Core Principles for Regulating the United States Financial System 2017. On February 3, 2017, President Donald Trump signed this executive order aimed at rolling back financial regulations established under the Dodd-Frank Act. This order emphasized the need to promote economic growth and job creation through a regulatory framework that would support innovation in the financial sector, including the promotion of financial technology fintech. The order underscored a shift toward a less restrictive regulatory environment, which parallels Trump's later actions regarding cryptocurrencies in 2025.
2. The Gold Reserve Act of 1934. This act was signed into law during the presidency of Franklin D. Roosevelt, effectively nationalizing gold and prohibiting private ownership of gold bullion.
The U.S. government collected gold from citizens and established a national stockpile, reflecting a significant government intervention in the financial system. Similar to Trump's proposal for a national digital asset stockpile, the Gold Reserve Act aimed to consolidate assets in a manner that the government deemed beneficial for economic stability and growth.
3. The Emergency Banking Act of 1933. Also enacted during the Great Depression, this act allowed for the reorganization of failing banks and established a federal insurance system for bank deposits. It was a response to a financial crisis and aimed to restore public confidence in the banking system. The establishment of the President's Working Group on Digital Assets in Trump's executive order can be seen as a modern parallel, as it seeks to create a regulatory framework that reassures the public and industry stakeholders about the stability and legitimacy of the digital asset market. The recent developments surrounding President Donald Trump's executive order promoting cryptocurrency and the repeal of SAB 121 by the SEC signal a transformative shift in the U.S. regulatory landscape for digital assets. This evolution not only reflects the growing acceptance of cryptocurrencies but also positions the U.S. as a potential leader in the global digital financial ecosystem. Future outlook.
1. Regulatory framework and clarity. The establishment of the President's Working Group on Digital Assets is likely to result in a comprehensive regulatory framework. By aligning regulations with technological advancements, the U.S. may create an environment that encourages innovation and attracts investment. Expect clear guidelines that will define the roles of various stakeholders, including developers, miners,
and financial institutions.
2. National Digital Asset Stockpile. The concept of a national digital asset stockpile may gain traction as the government seeks to hold on to seized cryptocurrencies rather than auction them off. This could lead to the U.S. accumulating a significant amount of digital assets, potentially strengthening its position in the global crypto market. Over the next few years, this stockpile could serve both as a financial asset and a strategic reserve in the face of international competition.
3. Enhanced institutional participation. With the repeal of SAB 121, financial institutions may increasingly engage with cryptocurrencies, offering custody and related services. This could lead to the development of new financial products that incorporate digital assets, making them more accessible to institutional investors. Consequently, the market may witness a surge in crypto-related investment vehicles, including ETFs and mutual funds. For innovation in blockchain technology, the emphasis on protecting developers and encouraging innovation will likely result in a boom in blockchain technology applications. Expect to see advancements in decentralized finance, DeFi, non-fungible tokens, NFTs, and smart contracts. These innovations could disrupt traditional financial systems, providing users with more control and transparency.
5. Global leadership in digital finance. The U.S. aims to reclaim its position as a leader in the global digital finance landscape. By promoting dollar-backed stablecoins and supporting the growth of legitimate digital assets, the U.S. might create a competitive edge over other nations. This strategic focus could lead to increased international adoption of U.S. digital currencies and standards. 6. Education and public awareness. As cryptocurrencies become more mainstream, there will likely be a push for educational initiatives aimed at both consumers and businesses. Increased understanding of digital assets will foster trust and encourage wider adoption. Educational programs could help demystify the technology and address concerns regarding security and regulation. 7. Impact on traditional financial institutions. The evolving regulatory environment may compel traditional banks and financial institutions to adapt their business models. As digital assets gain legitimacy, we could see increased collaboration between banks and crypto firms, resulting in hybrid financial services that combine the best of both worlds. 8. Potential for regulatory challenges. Despite the favorable regulatory environment, challenges may arise as the technology evolves. The rapid pace of innovation in the crypto space could lead to regulatory uncertainties, necessitating ongoing dialogue between industry stakeholders and regulators. The effectiveness of the new framework will depend on its ability to adapt to emerging technologies and market dynamics. 9. International response. The proactive stance of the U.S. government may prompt other countries to reassess their own regulatory approaches to cryptocurrencies. This could lead to a competitive landscape where nations vie to attract crypto investment and innovation. Countries that adopt supportive regulations may see an influx of businesses and talent, while those that impose stringent regulations could risk losing out. 10. Long-term economic impacts. In the long run, the integration of cryptocurrencies and blockchain technology into the economy may lead to significant shifts in various sectors. From finance to supply chain management, the potential applications are vast. As digital assets gain traction, they could influence monetary policy, cross-border transactions, and even taxation frameworks. Conclusion. The executive order signed by President Trump and the subsequent regulatory changes represent a pivotal moment for the cryptocurrency industry in the United States. As the government moves towards a clearer regulatory framework and the establishment of a national digital asset stockpile, the stage is set for a new era of innovation and growth. Stakeholders must remain vigilant and adaptable to the changing landscape, ensuring that the U.S. maintains its leadership position in the rapidly evolving world of digital finance.